we're seeing a level of complexity that's never been seen before.
David, for those who don't know you, could you tell us a little bit about yourself, about Hansen, about what attracted you to the energy and utilities industry, and what's really kept you here?
Well, I've been at Hansen for about 15 years now. And the first thing that attracted me to Hansen was my career in IT up to that point had been in services industry. Yep. And there, the longevity of relationship with customers and your ability to make a long-term difference, I felt was a little bit stifled. It was one project to the next. Hansen, being a product company, was what originally drew me to it. But I wouldn't say I joined Hansen because I had a great affinity at the time for the utilities or energy industries. That's developed in my time at Hansen.
You didn't grow up wanting to be an energy trading software when you were a little one?
No, it was a fireman or an energy trader. Was always a tough choice. As an 8-year-old.
I was a lawyer, God forbid me. God forbid,
and then I guess what's kept me there is I've found the evolution of the energy industry fascinating.
Yep.
From deregulation, or as I like to call it, disaggregation, because the more the market gets broken down, the more regulation that seems to exist to support the operation of it. But the deregulation, the decentralisation of energy production, the major push to energy to renewables.
Yep.
The market has changed so much, and I find it more fascinating than ever.
So Hansen has a long and fairly proud history in energy and utilities markets. So could you tell us a bit about the Hansen of today, and particularly how it's evolved in recent years as trading, optimisation and storage have just become such greater influences in the markets themselves?
Hansen started its life as primarily a CIS and billing provider. And those systems from back in our origin days were large monolithic systems.
Yep.
So firstly, the major change that I've seen is a stepwise change in our software themselves, our products themselves. From those monoliths to cloud native, modular, SaaS-based engagements with customers. So the products themselves have changed. And now more recently, you mentioned optimisation and price volatility. Those have created a demand for new solutions.
Yep.
And more interestingly, more recently in Hansen, we've been responding actively to that need with more targeted solutions built for the purpose of supporting optimisation of energy, both at the grid operator level, in trading desks, and also through partnerships like our one with Emulate, optimising at the consumer level behind the meter. So, it's brought a very different product focus.
Yep. Excellent. So we're here in your beautiful London offices today. So, I suppose firstly, why London? Why the UK? What are your priorities here? And also tell us a bit about your plans for wider Europe.
So when I started at Hansen 15 years ago, Australia was 60% of our business, 70% of our business. Well, now the European market is about 60% of our energy and utilities business. So the region broadly is incredibly important for us. A lot of my business is here. A lot of our customers are here. A lot of our products are built in this region.
Yep.
The UK market more specifically, we'd found it back in the day a little sewn up with the big 6R retailers as they were back then. But we're finding now, as the trading market evolves, there's a great demand for our trading and optimisation software, our energy data management software. And so we see the UK market in particular as a great growth opportunity for us.
Yep.
And we're very actively working here now to build our footprint. So the UK market is certainly a very exciting one.
Yeah, excellent. Do you see any sort of, I guess, variations between sort of UK and Europe, and then any sort of thoughts on Europe generally?
Yeah. So firstly, relative to our experience in other markets, I would say Europe as a whole is reasonably homogenised.
Yeah.
You know, there's, of course, at the grid level, there's so much interaction now with Nord Pool and the EPEX spot market. There's a lot of energy flow between the markets, and that requires a level of interoperability in terms of how the individual markets operate, because they're not operating in a silo as they used to. They're operating in an interconnected way now. And that means a price volatility in one market, a frequency challenge in another market has a ripple effect. So we actually see a surprising level of consistency in terms of the challenges being faced in the UK relative to Germany, relative to Finland. And then if I compare that to other markets we operate in, the divergence, say, between that and America is quite profound. And I know you now operate in the US. You've got an emerging practice there, and so for us, from the 13 energy regions to how Texas operates, the regulatory framework that renewables are operating in, there's a lot of divergence in America. And if you compare that to the multi-country operating through Europe, there's actually a surprising consistency here. Of course, nuances, but a lot of consistency. And that means for us, we can really tackle Europe not as a single place, but with a product set that's quite consistent and easily adaptable from one market to the next.
Absolutely.
As we know, the industry is very much being reshaped presently through the energy transition, developments in storage, renewables, optimisation. What do you see as the greatest challenges and the greatest opportunities for market participants in the next 3 to 5 years?
I think flexibility and price volatility. Maybe the two major themes. Lots of things come under those umbrellas. If we look at when a major push for renewable and BESS operators were gaining traction, all of the original business cases were on a wholesale trading ROI. Well, now with price volatility and what we see in the frequency response markets is people need to operate across the spectrum now. It's not just a case of trading on a wholesale market. And then we're seeing those markets evolve to respond to the challenges of flexibility demands. And that's putting a lot of pressure on trading desks and on systems. So I think we're seeing a level of complexity that's never been seen before.
Absolutely.
And we've talked about a little bit the interconnectedness of the market across Europe, and that does mean now a bit of price volatility or a bit of frequency regulation in one market can have far-reaching implications, because it adjusts the trading strategy and the price volatility for related markets. So the complexity needed to deal with that is quite large. And then we've seen, the electrification of everything. Our transport systems, buses, to AI and the demand on that's placed on data centres. So electricity demands are going through the roof. Consumer and government expectations on the use of renewables as putting other demands on the grid.
Yeah.
And that's creating a volatility in generation.
Yeah.
So we have price volatility, generation volatility, flexibility demands.
Yeah.
That puts enormous pressure on systems.
Yeah.
And in Europe, that challenge is all priced.
Yeah.
Which is wonderful, but places a lot of pressure on the systems needed to support and optimise your operation within that context.
Yeah. Yeah. Could you imagine if the energy trader of sort of 20 years ago was suddenly transplanted to today's markets and trading screen? I think their head might explode.
Yeah,
you know, it's a whole different beast, isn't it?
Yeah, and one thing we have seen is that the customers we deal with, they're looking for systems not because the systems that they have today necessarily are failing.
Yep.
The challenge is the people, the processes, the complexity demand a level of automation and complexity management that their old processes weren't designed to deal with.
Yep.
So we're being asked by our customers to come in and help support and optimise that.
Yep.
So it's often not so much we're replacing an old system, but we're automating manual processes. We're supporting trading desks so they can focus on their differentiation strategies, not the execution and responsiveness of things that can be readily automated.
Yeah. How do you see, I suppose, the real sort of winners in your approach? How are they adapting to this volatility, to this interconnection? What capabilities do you really see as being essential for them to remain competitive?
Yeah, I think the ability to automate trading and operation.
Yep.
To participate across the spectrum.
Yep.
So you talked about the trader of 20 years ago, which was pretty much a day-ahead market, I think, back then. Now, an intraday market, the frequency response markets. And if you're not operating across the spectrum, then you're not maximising the return on some pretty expensive assets. So and that's driven for us a new module in our Hansen Trade product, multi-market optimisation.
Yep.
And so I think the ability to optimise your trading across the spectrum, I think, is perhaps one of the biggest challenges and biggest opportunities that exist today.
Yep. Many energy companies are now managing portfolios encompassing a really wide range of generation assets, storage of renewables, and so on and so on. How's this changing the day-to-day reality for trading teams?
What we're seeing is the decentralisation of balanced responsible parties in the market. It used to be the realm of the grid operators and the grid operators only.
Yep.
Now anyone who's participating with some form of flexible asset is increasingly have an expectation placed on them to participate in the market in a more meaningful way beyond just I'm an asset and I'll trade that asset to maximise my own return. So they need to be able to deal with that complexity, and that means it's not just a simple matter of trading, but there's a connectedness between the asset and the trading.
Yep.
So the relationship between energy data management and the management of the systems that support the ability to turn on and off production, to determine if we're going to trade out of or trade into storage assets. There's an enormous amount of complexity, and systems and processes need to change to support that complexity.
Yep. At Hansen, you work closely with organisations active across
wholesale and flexibility markets. What do you see as the main challenges they face when it comes to optimisation and to decision making?
Yeah. I mentioned a moment ago the asset to trading challenge, and with the price volatility that exists, the ability to understand, predict that price volatility, to understand it, and work out how to respond in real time to that, I think is the biggest challenge for them, and their expectation and the opportunity to participate in the flexibility markets substantially increases the range of options open to them, but that increases the complexity of trades. So I think managing that, maximising the opportunity from flexibility, whilst managing the complexity associated with it is perhaps the duality of the challenge being faced.
Yeah, excellent. Now, I can't believe we've gone so far on this interview without me asking a question about AI. That's very, very wrong of me.
Yes.
But we see it everywhere. It's getting into every corner of the energy trading world. How's it sort of affecting what you all do, and how's it primarily influencing your clients?
I think there's an enormous amount of data available to us now, from the frequency of readings in smart meters to weather patterns to price predictability models, to the ability to turn on and off assets. All of this data is available to us. So the ability to process that in near real time and make decisions or at least recommend decisions off the back of that, I think is a great power. And AI speeds our ability to do that. So our first big forays into that in this space are in the analysis decision support. So because of the criticality of the grid, because of you won't be surprised to hear nations take a reasonably severe view of making sure their grid has stability. We've certainly not let AI loose at the front end of making decisions. But at the analysis end, on helping us understand the results of past trading, to help us give recommendations of decisions that could have been made to improve your position, and then use that to influence the guardrails we place on our trading software to support automated trading moving into the future, I think is a really exciting area, in the first place where we're really seeing its value.
What's your gut feeling? A couple of years down the line, where do you think those guardrails will have sort of moved somewhat, or do you think there's always going to be that need for humans to really retain a certain level of control?
Can I answer yes to both of those?
Yes.
I don't see it as an either or.
Greatly diplomatic.
I don't see it as an either or. I think, in decisions as critical as this, there will always be a human in the loop. And there should always be. But I see lower level decisions. I see AI within human in the loop guardrails supporting execution of trades. So I see it moving from an analytics into real time support of execution with human in the loop and guardrail support, of course.
how are organisations like Hansen really specifically helping organisations become more automated, become more optimised?
Yeah, if I take a step back from the trading side of energy for a moment, more broadly, we're supporting our systems with agentic frameworks that help, again, with human in the loop, decision support and action support across our suite of products. So that might mean a billing manager agent to support the function of. We have a software in the market for a AI virtual agent that's performing the function or supporting the function of a call center agent in a energy provider. So I see agentic frameworks connected to core decision systems as a great way for us to help add productivity to people operating in roles. And like our own development teams are leveraging AI for the development of our software, I see it increasingly as an experienced person leveraging agents to support perhaps the lower level analysis work or the execution work that perhaps was done by humans in the past, but still with the deep subject matter expertise are never disappearing from the decision-making process.
Stepping back in history for a moment, can you remember the very first moment when AI sort of came onto your own radar, Hansen's radar, and what was that first sort of little experiment you might have done with the kit?
I haven't thought back what seems like that long ago, but of course was only a few short years. And I guess at the time it was glorified Google. I mean, it was a search engine on steroids that provided more context and more deep and rich information. But now with retrieval augmented generation, the depth of context that the language models now have means that the depth of information they can provide, relevant to the context that we're asking for support in, and their ability to take action automated against that context, leaving human in the loop to do reviews rather than action. So I think in those couple of short years, we've seen it move from providing information and insight to now supporting and taking action with deeper context. And I think that's a substantial step forward. What we haven't yet seen is us realise the value of that across a broad range of functions. That's still just coming. And of course, the systems needed to support the guardrails, to support the security, the GDPR, and all of those things are needed to be in place to make sure they're all happening within the right framework. And of course, as a software vendor, that's pretty important to us and something we're very focused on now as we start to release AI-centric software into the market.
Excellent. One of the things that I've really enjoyed in energy and commodity markets in the last few years has been sort of entrance, this new sort of tranche of market entrants. I remember go back even sort of 3 or 4 years ago, 2% of our attendees might have identified as coming from the investment management sector, the hedge funds, the investment funds, the private equity, the infrastructure investors. That has just shot up. We're doing an event in the US next week, and 20-25% from that sort of primarily sort of hedge fund industry. So looking at that sort of investor, that non-traditional sort of utility market participant, how's this? How do you sort of find them when you're interacting with them? What are their sort of differences and requirements? What are their different expectations? Yeah, how are you finding all that?
I agree with the trend that you've identified. We've seen it for a while, but it's now at that hockey stick level where it's starting to have a major influence here in Europe.
Yep.
I'll just go back momentarily to America. In the USA, through government taxation support, there was a major push for solar rollout. And associated with that was an initiative around community solar, as it was called, and that gave tax incentive to roll out renewable, as long as a percentage of the generation was made available to communities who otherwise didn't necessarily have access to solar. So high density inner city households, lower and middle income earners. All of the investment to roll out the solar was of course done by funds, investment firms. But then after the funding of the investment, they then woke up and realised, I have to actually participate in an energy market here. I have obligations around a highly regulated industry. And we're seeing the same thing here. Of course, all of the it is a major infrastructure play. So it's not surprising that we're seeing private equity and hedge funds and other finance-based backing active in the market. But what started its life as a wholesale-based ROI on an asset that's generating or storing electricity quickly became a realisation of two things. They're participating in a very volatile market, which creates great opportunity for them, but also risk. But also they're actually managing assets. And we talked about balanced, responsible parties. So many come to us asking for support for trading, and realise that only after interaction with us that they've actually got some energy systems that need management, and without effective management of those energy systems, it's hard to realise the full value on the trading side. So I'd say the first thing that I've really noticed is a growing realisation from that community of the need to actually actively manage the day-to-day asset. The second interesting trend I've seen is an increasing focus on, and I don't know if this is the right terminology, if the industry's accepted this terminology yet, but balanced responsibility as a service. We're seeing a lot of service providers out there are now whose only function is to provide that balanced responsibility as a service. And that I don't think really existed 10 years ago or even 5 years ago. And I think that's an emerging segment of the market that perhaps in part sprouted up because of the investor-led rollout of production assets.
Okay, and now I believe we'll be turning the tables. So over to you, David.
The interviewer becomes the interviewee, Ben. Are you up for it? So in your role as a participant with Energy Trading Week, you have access to energy participants, trading leaders. It's a unique position that you have. What are the major themes and trends you're hearing from trading leaders?
Well, it's a really interesting question because I think we sit in a very unique place in the industry. We have this real correct perception of absolute neutrality, and we're exposed to, we're interacting with leaders from all across the ecosystem on a daily basis. What are the key themes we're seeing? Well, AI, and a bit more of AI. So AI is, as I say, everywhere. We hosted an event in London a couple of weeks ago. We had about 80 different sessions. Every single one of them, none of them would have passed without mention of AI. That's great, and it's moving as we know, from the sort of experimentation phase to some really concrete outcomes. It's really interesting to see the types of companies and the sort of characteristics they share who are really making the most from it. It's,
okay.
There are some of the larger trading organizations doing great things, but equally, you see some of the sort of small quant funds who are just doing some outrageous stuff with it. And so AI is really exciting. We do an annual survey, we release all the findings, but I think at our last session, we had quite a lot of interest, particularly around sort of going back to the less glamorous side of AI, the operation automation, that sort of thing, the supporting regulatory reporting, sort of coming a bit more back on the scene, as well as the more sort of sexy optimization and front office-y type stuff. So that's huge. Other things that are big, flexibility obviously is big, of great interest. And I think we'll talk a bit more about that in a moment. Alternative data, super interesting. Well, data as a whole. Again, there's been that cliche for a while of garbage in, garbage out as far as AI is concerned. But we're now seeing organisations not achieving what they want with AI. As a result, going back to the drawing board, really strengthening their data management infrastructure, their data architecture, getting that well in place, and then they're able to start experimenting with some really interesting, cool, different types of alternative data. Weather is really hot, geospatial, really interesting. So there's just so much really fun stuff going on. And then the final thing really is geopolitics. That's always on everyone's mind. It's just such an interesting industry where the market can just move so frequently, so dramatically as a result. Yes. We're we run events all around the world. I must say, first thing I do in the morning is I check the news and think, God, I hope there's been nothing happening in that particular destination overnight.
Or perhaps if it has happened, it creates for some interesting content and question time. That's really interesting, Ben. One of the themes you mentioned was flexibility. And of course, with our storage, with increasing flexibility in generation, whether planned or unplanned flexibility, what role are you seeing these playing?
It's deeply interesting. Flexibility is just becoming one of the most fascinating traded asset classes out there at the moment. Obviously, there's great interest in revenue stacking, how that can all be optimized. I suppose being maybe a bit of a sort of technology geek at heart myself, I'm just fascinated by the whole technology side of it. It's no longer really about the asset itself. So much of it is about what software are you using to optimize. That's making all the difference. It's providing some really interesting real use cases for AI, exactly as Hansen's doing. It lends itself beautifully to AI. And also, I think weaving back into what we were talking about earlier with the entrance of new market participants, we're really seeing that particularly, obviously, in the flexibility and the storage side of things. And these sophisticated investors, these funds, they're coming in with out of energy industry experience, expectations, learnings, and they're really helping drive innovation in a very interesting way themselves.
From my limited understanding of financial products and financial trading, of course, flexibility, volatility, risk are actually the foundation of many of the products. So not surprising that that's bringing a perspective and creating opportunities for the what's traded and how it's traded and when it's traded.
Yeah, absolutely. They're certainly keeping the traditional market participants on their toes and really forcing them to really helping drive the industry forward. So fascinating sector.
Yeah. Coming up to Energy Trading Week, I want to ask you a question in two parts. What's dominating the conversation?
Yep.
And what, apart from AI, is dominating the conversation?
Well, I said geopolitics already as well, but let's go back to that because that is also quite interesting. We've got 120 days, pretty much exactly to go. So I suppose the whole world can change and change and change and change again before then. So that'll be interesting. Yeah. It's always an interesting time of year as well because we're coming up to we're starting to approach the winter period with all the sort of trials and tribulations that might bring. Well, essentially, Energy Trading Week is an absolute beast of an event. It's got about 2,500 industry professionals and leaders from all around the world. It's made up of 10 unique conferences. There's about 120 different sessions taking place throughout that. So really everything is touched on, and so the question is really quite specific to the attendee type themselves. So there's really fascinating things happening on the regulatory side as well, developments in remit, EMIR, other regulations. But I think as a whole, it's those points I touched on earlier. AI is unavoidable. Quantum computing is definitely something we're starting to hear spoken about more. I'm very, very, very excited for that. We've got a few sessions which we're starting to look into that and how that's going to start to interact with the world of AI. It's not going to happen tomorrow, but
and that's at this year's Energy Trading Week?
There will be a few.
I'll make sure I check in on that.
Yeah. So it's so fast moving that who knows what's going to be on everyone's mind in 4 months from now.
Yeah.
And the final question would be, if you could leave the listeners from utilities, trading companies, energy companies with one piece of advice, what would that be?
Can I be cheeky? Automate everything.
That's a very, very excellent answer. So thank you, David. It's been a really, really excellent conversation. Really, really appreciate you having us here today. And thank you for everything. And I will look forward to seeing you before too long.
Yeah, thanks, Ben. I've really appreciated it. And look forward to maybe one day there being an Energy Trading Week down in Australia.
I would absolutely adore that. Maybe the Great Barrier Reef or something like that.
A well-known trading hub in Australia.
Absolutely. A few great whites skimming around. It sounds kind of familiar, maybe. But anyway, thank you.
Cheers.